The current climate is one of a kind of question mark. Everybody's asking, is this the end of the bubble?
Right now, it's that moment when the party's ended and somebody has kind of flicked on the lights and you don't know how the rest of the night's gonna go.
You know, I wouldn't say that we're in a significant downturn right now, but there's no question that the market has turned. Every time that the market starts to get a little bit more frothy, there's somebody out there that's saying it's a bubble. And everyone wants to be the person who calls the next bubble.
A downturn, a softening, whatever you want to call it. I think everybody's been trying to label this market since Q4 of last year, even longer. It's a mistake to even call it a bubble now, in my opinion. We need a new word.
I start with the premise that a slowdown isn't necessarily a bad thing. You need a little bit of scarcity to get people focused.
We had sort of a bubble, a mini bubble that didn't quite pop, which is good, where the market got overvalued. There were too many unicorns, too much money flowing into startups.
We're seeing upstream markets starting to tighten. We're seeing deals take slightly longer to close, so we're definitely seeing a tightening of the market.
What we've seen is this sort of contraction of the number of growth rounds where, nosebleed valuations that were paid back in 2015 are no longer there.
The sort of the thing that you read in the papers is, the sky is falling and the end is nigh out here. It's not what we see. Down rounds were 3% of all rounds of funding a year ago, and they're in the 20s now.
For the companies that are able to raise money, even if that money is at a lower price than the last round, so the dreaded down round, if that money gets them to an endpoint where they're self-sustaining, then it's absolutely worth doing.
There's a big fuss around down rounds, and there's a stigma, in the market for anyone who goes through that. The down round is better than going bust.
The supposed bubble that we've had over the last couple of years, it's been called a dry bubble as opposed to the bubble in 1999, 2000.
How was 1999 different from 2016? Radically. People felt like they needed to rush out to the internet and stake their claim.
I lived through the bubble in 1999 as an entrepreneur. That bubble, a lot of those companies went public.
When the ball drops on the year 2000, it will be a momentous event for the world and for the U.S. economy, which is closing in on its longest expansion ever.
It was a public market, and it was a tech-driven bubble.
Really bad behavior was happening across the board. There were many, many companies that were highly unprofitable that were being taken public by bankers, that it was almost like if you got allocated IPO shares, it was like making money for nothing.
The first dot-com bubble collapsed, left a scar on a lot of older tech workers.
The difference here, companies are just not going public, and that's another problem.
You have a lot of companies that should have gone public, still being valued at private valuations.
Lacking a healthy IPO market, the capital kind of gets stuck at the companies. And so I've called this capital constipation.
As a consequence, investors are getting very hesitant and very nervous.
If you look at the great kind of tech bellwethers, Microsoft, Apple, Amazon, much of the kind of economic value of those companies was available to the public market. One of the things I worry about is the unicorn market has become very selfish.
I've had clients that were painting a picture of 50 to 100 billion in their expected value someday. That is changing.
It really begs a question of, how are you actually going to make money on these companies? Because to go public, you're actually taking a step backwards in valuation.
If you look at the sort of the leaders in this trend towards staying private longer, people talk about Facebook, but I think you can even look before Facebook at Google, who was really brought into the public markets somewhat kicking and screaming.
Now we're almost in the anti-unicorn sort of movement where people will sort of try and get below $1 billion valuation because people have become extremely skeptical and snarky about a unicorn valuation.
I think as things slow down, the rate of change slows. It's like the top of the roller coaster where you kind of get there, you're still going up a little bit, but you feel the dippy feeling in your stomach.
Everybody's looking for a bubble and looking for the end of the bubble. That means greed is winning over fear right now. But fear isn't gone. People who are attracted here like to be on the cusp of the cutting edge in technology, and they're idealistic in thinking that their capitalism can change the world.
My crystal ball's in the shop, right? So I don't know what the future holds. But what I do know is that the number of down rounds and flat rounds is a perfectly healthy thing because it corrects the excesses of the last kind of 12 to 18 months. Important innovation will continue to have value.
In down times, it was a great opportunity to invest. The culture and the DNA of the founders is stronger. The company itself has a much more rigid mentality as to how they spend every dollar.
I think if you're a stupid app or a bunch of Harvard bros that are entitled and think they can do X, Y, Z, I don't think people are funding that anymore, which I think is amazing. And I also think it levels the playing field.
We're sitting in the destination for the gold rush, where literally people caught the rumor that there was gold in those hills. I think that gold-seeking, treasure-seeking mentality still pervades this area.
Fitzgerald wrote this great passage in a story called My Lost City, where he says, in New York in 1927, the tempo of the city had changed sharply. The shows were bigger, the liquor was cheaper, the morals were looser, and the restlessness approached hysteria. And that's kind of what late 2014, early 2015 felt like.
All you have to do is look at the NASDAQ or the S&P 500, and you can see that it's reaching all-time highs.
Without a doubt, late-stage funding has changed dramatically, especially from the extreme nature, the insanity of 2014 to 2015.
It's a market tipping point that got hit. When the calendar turned for 2016, the spigot of that capital just completely turned off.
We just feel that there's a lot more that the companies need to prove out.
Okay, so a seed round is usually the first round of capital that goes into a startup. With a seed round, usually the company doesn't have necessarily a proven product at all. By the A round, they have the prototype completed, and it's just starting to get out there and they're trying to demonstrate that the traction is real. By the B round, the traction needs to be fully demonstrated it's real. And by the C round, you're putting gas on the fire. In terms of capital raised, it's usually $750K for a seed round, up to maybe $1.5 million these days.
As a limited partner, an LP, I'm the money behind the money. At the end of the day, the moolah has to come back into the kula, right? So we give venture capitalists $1 and we expect $3 in return. Today we see these unicorns, and I guess the decacorn is the other term.
We probably had unicorns in the first place because a couple of people made what at the time seemed like crazy bets that today just look brilliant. But not every unicorn ultimately has that sort of potential.
What I worry most about is that there are a bunch of companies who are pedal to the metal when it's time for them to raise money again and they haven't proven the hypotheses necessarily that they've been testing. Will that money be there? I fear that that'll be when the real correction starts.
Towards the end of 2015, we saw sort of the peak of private market sort of valuations and deals.
A lot of investors overbought these startups. Even though we had more unicorns than ever before, there was more venture capital that wanted to go into them, so they overvalued them.
The chickens are coming to roost, and the reality is coming true that these companies are not the billion-dollar companies that they've been valued for because the business model is not there.
It turns out there is a secondary market for late-stage VC-backed private companies.
The secondary market is the Wild West.
Facebook, LinkedIn, Twitter. These were the companies in which the initial secondary trading in our marketplace really thrived. Mutual fund type buyers depend on double-digit equity growth in order to make their models work. And those companies are no longer available in the public market. They've been migrating into our market.
It used to be that it was a kind of an honor to go public and to see that public pop. And today I fear that entrepreneurs are so focused on staying private that they've lost that sense of awe of the public markets.
In Silicon Valley, there's a bit of a machismo around not going public and staying private longer. SPL, actually. That's a kind of cool kid acronym, which I completely disagree with.
Valuations are coming down, but the amount of capital coming into the marketplace we see continuing.
You will continue to see a lot of money being poured into here, and you'll continue to see totally unnatural and somewhat irrational economics in the Bay Area.
A lot of times I'll tell startups, just forget it. Like, kill your idea. It doesn't work. And they will not listen. They just keep going.
One of the big problems that you see with a lot of startups is that they assume that the market is actually there when it's not. The customer might tell them, yes, I like this, but it's easy for them to say yes. It's harder for them to open up their wallets and pay.
We started VR Lab in 2014. There was a lot of money being thrown at whatever VR idea that was coming up. We really wanted to test our assumptions first, and as we were doing that, the market shifted, and we found that by the time we were ready to come to the investment markets, they were being much more reserved, perhaps, in how they were approaching these. And so we're actually having to do a lot more work now to prove out what it is we want to do. And we've seen a lot of other entrepreneurs in our community struggle with this.
I started the idea for Zirtual around the same time that the movie The Social Network came out. And I remember watching it in Reno, Nevada and being like, that's awesome, I gotta get into that.
The startup experience is romanticized, and everyone wants to be Mark Zuckerberg, but not everyone realizes that when you're actually in the heat of things, you're probably gonna be on the floor crying at least one night there.
Simple definition of the business is an on-demand mover when you need one. We've talked to several VCs, ultimately being told, come see us in 6 months.
We believe in it so much that we're putting everything out there and we're going for it.
It's definitely a big challenge, especially when you're bootstrapped, especially when we're really living off of the revenue that we're making.
It was hard. It was hard and it was expensive. And getting into hotels in particular, in San Francisco, where the market is so compressed, you had to pay to play. I mean, it was the one thing of convincing them that this idea could work. It was another thing of, well, if you want in, show me the money.
So they're being smart, and they're saying, we already need to know you, or there needs to be something. Maybe you need to be on our trend, but we're not just gonna invest in your thesis. Like, prove it somewhere.
I have startups come to me, like one guy had spent years developing this amazing technology and like $7 million doing this. He comes to me and I'm like, what's your business model? You've built this great technology, but technology isn't a business.
I tried to fund my startup. I did pitch after pitch after pitch, but it didn't work out. People were interested here and there, and they even asked me to shift my business towards a different route, but I wasn't willing to do that.
So I started the startup in 2013 and went through a couple of rounds of funding. And then in April of last year, we decided to close down. We pivoted twice, which basically means we tried new ideas, trying to figure out what our product was. And then we got to the point where we said, we've burned through a lot of the money and we need to close up shop. And that was probably the hardest decision of my life.
The emotional roller coaster of the last weekend of Zirtual's life was doing everything we could to run numbers, run calculations, see if there was any way we could save it. But unfortunately, a few of our investors kind of balked, and because of that, they couldn't get consensus and make it happen.
In Silicon Valley, the anxiety is my company going to go public for enough money that I can retire? Am I going to be looking at being a billionaire soon? And if not, am I a failure? The scale and the stakes of what's going on here in Silicon Valley are so much bigger than almost anywhere else you look.
You can't exactly tell your investors or advisors everything you're afraid of because you want to demonstrate confidence. You want to show people up and below that you have everything under control.
Closing the startup, you just pour your soul into it. It's kind of like, it felt like a breakup. When you wake up in the morning and you remember again that you're broken up.
You're on a plane and it's falling, and you're trying to build the engines as the plane is falling. Yet you're asking people to help you get out of free fall, right? And at some point, people are like, dude, it's just too far gone. Get off the fucking plane and just go back to this regular job.
When my friends were graduating, when it would have been my senior year, because I took a year and a half off to work on Zoku, I fell into a little bit of a depression.
Right now, I'm unemployed. I'll be honest, I get help from my mom. I think a lot of people get help from their parents.
Growing up, my family had kind of bouts with unemployment, and I really cared about giving people meaningful work. It was the thing that meant the most to me and my co-founders. But at the end of the day, if something happens with the company, those employees, no matter how wonderful they are, they get hurt. They lose their source of income. That was what was so hard, and totally understand in the media, like, I got freaking flamed for it, and I get it. I totally get it. But me and my co-founders, it was our everything. It was our baby.
I'm looking for a job in tech, something related to computer science. And it's been really difficult.
Job market right now is really tough. I am currently job hunting.
Right now, I've just been applying left, right, center, and I'm just hoping to get any gig possible.
Because of the softening, people have really sort of not really stopped hiring, but they've really slowed down their hiring.
There is a change in the hiring landscape. I don't think companies are just hoovering up as many people as they used to indiscriminately, the same way that venture capitalists aren't just spraying the money around.
In most companies today, people are the biggest asset in the company. It's not machines and equipment. It's actually human beings, the ideas in their head, and their productivity.
You talk to anybody in this industry, and talent will be one of the 2 or 3 main things that dictate the success of a company.
When you think about today's environment, we're 7 years into an economic expansion. We're in a period of slower growth.
Bureau of Labor Statistics says traditional colleges are graduating about 60,000 software engineers a year.
There are a lot of people looking for jobs right now, so it's how do you stand out? I think the biggest change here is that you have to network, you have to know people in order to get in.
The interview process varies from company to company. Some can be really short and are more EQ based. Some are a lot more technical. Generally, I would say there is a phone screen with a recruiter, kind of just feeling out if you're the right fit culture-wise. Sometimes there's a technical phone screen. Then generally there will be a coding challenge. You could be brought on for an on-site. During the on-site, you could be doing whiteboarding.
You definitely do feel that the engineers are highly in demand, but there's definitely a lot of competition out there.
The job hunting situation for me has been a little bit more difficult in the last few months.
It seems nowadays that you can't be taken too seriously unless you have a master's.
I know a lot of my peers have gone to schools a lot better than mine, who aren't employed right now.
I've got a couple of engineering friends that have lost their jobs. Seems like companies are a lot more strict about who they're hiring.
I do have friends who are having a hard time getting a job, or they lost when a company went under.
Companies around the valley in the last 6-8 months have been going through a very painful process of cutting back. We're going to cut back on growth of hiring. It sort of depends on a company by company basis.
A ton of companies in Silicon Valley overhired. There was a lot of overlap. You have certain companies, Twitter, for example, acquired so many businesses.
Twitter's board of directors meeting today in San Francisco, and speculation is rampant about the future of the company.
How could it possibly be that they had the right number of employees?
A lot of companies are working on tight budgets, tight schedules.
What we did at Zillow was we hunkered down. We cut our expenses way back, which involved letting some people go, 30% of the company. In good conscience, for the health of the enterprise, we couldn't afford to continue to pay them. That was a very hard experience for me personally.
This is day 2 for me at my new job. The most important thing for me was company culture.
We find the students, they've gotten a lot smarter and more savvy about what the outcomes are going to be like and how to prepare for them.
I know a number of people who are really trying to decide, is this something that I'm passionate about? Is this something that 5 years from now I'll look back and say, I made an impact, I made a difference?
Yes, there have been a lot of companies cutting employees. Those people are not out of work for a long time. I don't think we have an unemployment problem in Silicon Valley. For people who want to be employed, they are employed here.
3 or 4 years ago, even 2 years ago, there was a sense that the market was going up, and it was going up so quickly that buyers had to move rapidly in order to be able to keep up. They felt like if they didn't get something now, they may not be able to afford it in a year or so. That's changed.
All these unicorns that were raising tremendous amounts of money, they'd say, hey, we're 100 employees now, we're gonna be 400 employees in 2 years. We need to go lock up that space. So they would go sign long-term leases on all the space around them and then not use it. What we've seen happen, a lot of those companies are releasing space.
The secret's out. There's more sublease space on the market. Companies that had, exponential growth projections are, reevaluating.
When the big boys start subleasing space, this is when the world starts shifting.
It's become a very capitalistic place, but there's still this underpinning of organic food and love and peace, and we're the Bay Area kind of thing.
I mean, that's where IBM and the big kind of giants were really innovating, and the HPs of the world and Jobs and Wozniak, it's kind of where it all happened.
The story of Silicon Valley, like the true silicon in Silicon Valley, starts with Shockley Semiconductor. A bunch of those guys left and started Fairchild Semi, and a bunch of people left Fairchild Semi and started Intel. So really the kind of founding story of Silicon Valley is a story of people leaving places to go places.
That was the axiom that software is going to eat the world. In a lot of ways, technology has been eating real estate.
There's definitely a trend to being in cities in the Bay Area. So San Francisco has become the focal point of the tech industry. That wasn't the case even 8 years ago.
In the past, Silicon Valley would get 7 out of 10 companies that would come here after receiving venture funding. Here being Palo Alto, Mountain View, Redwood City, and so on. 7 out of 10 companies now seem to go to San Francisco. I mean, investors, board of directors, everybody's paying attention to the real estate.
There's the images that companies are trying to project. They'd rather be in a cool south of Market location than some big, sterile campus in Redwood City.
San Francisco has had a tremendous run-up in the number of startups and venture funding. 51% of all the companies leasing 25,000 square feet or more have been in business for less than 9 years in San Francisco.
I remember when I moved here, I was in San Francisco maybe once a quarter or twice a quarter because everything was happening in the valley. And it was cheaper to have offices than Palo Alto, so it made a ton of sense to start here. Fast forward, it's so freaking expensive and impossible, you wonder where we're gonna go.
The marginal cost of rental space, of employees, of, you pick whatever it is, has just gone up and up and up.
It's very expensive to live here. It's a wonderful place to live, but it is unfortunate when some of the people who are really adding so much to our community can't afford to buy.
New York, in my mind, and I'm from there, I would always say is the most expensive place. And they're like, God, it's so expensive here. New Yorkers visiting here who are complaining about the costs.
Well, of course, the housing's the most expensive thing. I haven't really found any housing under $3,000 a month here for a 1-bedroom. I would do a studio, except I have a family.
I work in San Jose, but I live in Daly City. It's cheaper for me to commute to work than to move closer to work.
The cost of living in the Bay Area is just crazy. I come from Spain, which is a beautiful place to live. And there you can live for like, $1,000 a month. While here with $1,000 a month, you're living under a bridge or something.
You look at these young folks and think, gosh, can I really afford to be here? And they're paying $4,000 a month for a 500 square foot studio, or maybe even if it's just a bedroom.
I moved out here with 7 other girlfriends from college. All in all, I think it actually has worked in our favor in the sense that we get to split rent by 8 people.
I actually live at home still. As of now, there's no way I could afford an apartment on my own or even a shack on my own.
You're grinding, living here. It's a bit of a catch-22 because it's creating great opportunities for work, but that's a tough way to live your life, commuting from Sacramento to San Francisco to drive your Uber for the day. There will be a breaking point.
This market has been a painful thing for buyers. It's impacted the people who have to live and work here because good paying jobs should be able to buy yourself a nice house, and then somebody comes in with a whole lot of money, an investor from overseas buys that property out from under you, and there goes your hopes of buying a house.
I have family that lives in Atlanta, Georgia, so a house out there, 3-bedroom, 2-bath is $250,000, and you could probably get a mailbox out here for that.
We're looking at a mid-range price of somewhere between $600,000 to $800,000 roughly. Now the nice thing about that is that's a real sweet spot. You have a lot of families that can still afford that price, and it's a decent home. So people who don't have tech jobs, they're out.
It's now so expensive to live here, to build here, that the economics are not as obvious as they were.
One of the fundamental challenges we're facing right now is sellers are looking at the way the market has behaved over the past 5 years. They haven't seen the trends and the softening and the flattening of prices.
From about 2013, 14, 15, you're seeing, double-digit growth, quarter over quarter with rents, and now you're starting to see a little bit of a pullback.
Companies have either planned to shed extra space, they've accelerated that process quicker than they thought that they would or would need to.
When companies find themselves having a sublease space, in the past couple of years, they were able to actually come close to break even. It's going to be harder to make that happen just with the amount of supply that's come on the market.
We've seen, prices of real estate go from $65, $70 a square foot to subleases going for 50, 45, et cetera. Where is that ultimately going to settle out? Who knows?
Entrepreneurialism is essentially about bootstrapping and trying to get a profitable company that can scale. And what really binds employees to a company, which is really about mission and career development and impact, and that's never changed.
The startups I like and the advice I give is to make sure that you understand where the drive for the startup is coming from. If it's coming from your heart, that's the right spot. If it's coming from your wallet, that's the wrong spot.
I think the thing that makes Silicon Valley so special is the risk-taking atmosphere and culture. People always wanting to try new things and do things a different way. By being in a startup and playing the game, I'm not working for somebody else, so I control my destiny.
Really fell in love with the energy and kind of, chasing the dream of building something big and meaningful that impacts a lot of people.
The famous Apple Mac launch ad, I saw that Super Bowl ad when I was a young teenager, and I remember feeling kind of the rush and the power of what it meant.
I didn't have a suit, so I went and I got a suit. I went into a hotel and I asked, hey, can I talk to the GM? So I went and I said, listen, I want to be able to place my clients that are in corporate apartments in your hotel. And I want them to be able to come in and out whenever they want to. And he said, I think you should, leave the premises. This is for sure a hooker service. And I was stunned. As I was leaving, he said something to me that I'll never forget. He said, I'm not gonna do this, but this could work. And that's all I needed.
It was sort of a, do I focus my efforts on actually getting the financing and getting the funding, or do I focus my efforts on building a company and making it sustainable? And ultimately, I knew that I had more control over one of those, so we decided to focus on actually building a company that could be sustainable.
We're spending so little money, we can keep trying things, right? Until we say, well, we did it perfectly, we did the marketing perfect, we did everything perfectly. You know what? The market rejected it. Okay, next. We haven't gotten to that place yet.
This business really toughens you up. Every month, it's like we thought that it would be at the end of the runway, and then something occurs and we're able to go another month, and we're able to go another month, and we've been pushing and pushing, but it's a crucible. It's a trial by fire.
When you go through trials and tribulations, it either breaks you and you get bitter, or it bends you and then you snap back and you're more resilient and malleable after that.
We're building a company that's going to be around a lot longer than we are. It's not something that we look at as, oh, this is a project that may or may not work out. No, this is our whole life.
Fall 7, rise 8, I think is the Japanese proverb. You just keep going and you keep fighting and you eventually just find a way to make it work.
You shouldn't let funding or lack of funding or VCs or anybody, if you believe in what you're doing, you do it.
Markets go through cycles. Yes, we've come off the highs. Yes, companies aren't raising money at the same prices they were 6 and 9 months ago. As markets come down, they tend to be a little bit more sober. So that's essentially the cycle that we've gone through.
If you look at history, every 8 to 10 years, you have a recession. We're here. Okay, welcome to the club. So it doesn't mean the world's falling apart, because after a recession, what do you have? Great times again.
For the founder, it's always challenging to say, well, I was wrong. Is there anything different that we should rather do? And we, as investors, need to be very open. Sometimes it's just an adjustment, it's a shift, or it's a completely different thing.
Make sure you plan for that rainy day. Really run through a scenario of real crisis where capital is no longer available and play that war game.
Every industry is trying to transition itself into a tech-like industry. Banking
consulting, retail, finance, government. The tech industry, even if there is a significant pullback, is not going to close up shop like a caravan and leave town.
The amazing thing about the Bay Area is from south of San Jose, east to Walnut Creek and north to Petaluma, there's businesses everywhere.
To date, the benefits of being here have outweighed the costs. I think we'll continue to see Silicon Valley being a hub of innovation for the foreseeable future, but I think that that'll evolve.